Hey everybody, it's Tuesday. It's 11:30 a.m. Eastern Time. So as always, it's time for another edition of Tech Tune Up with Paul Meeks. I'm that guy. Today is April 29, 2025. We have lots to talk about, not just on a micro individual stock level, but I will share my picks and pans, and I try to be very specific about trades, and then also delve into some overriding tech themes. So, as I go through my commentary, start to think about questions that you'd like to ask me at the end, and I will try to answer as many as I can. And if I can't answer one, I will follow up and get you an answer. I'm very easily found. So, first of all, the stock news of the day, or at least recently, I was pretty impressed last night with Spotify's results. Even though the stock was marked down this morning, one of the things that had dissuaded me from owning Spotify in the past, even though I do like its subscription model, is that the company only last year, after many years of getting after it, broke into the profit making column. And so, at least now they're starting to ramp that up. I'm going to keep an eye on it. I think it is very important today that the stock stays above 50-day moving average support, which is $576 a share. If we succeed in doing that, at long last, I might take this stock to my tech or least tech-oriented buy list. Next in the news is Alphabet. So the company announced earnings since we were together last, and the stock was really oversold heading into earnings. So no surprise with its pretty solid result. The stock had a nice bounce, but that didn't really hold. And I will tell you what I'm worried about with Alphabet is if this madness with tariffs leads us into a recession, which I think it will, it is going to impact digital advertising spending. And despite all the cool things that Alphabet might be working on, it is still brought to the dance by digital ads. In the meantime, they might get a little bit of positive offset by the success we're seeing with Waymo in the autonomous vehicle market, but we still need to see that ramp further. I've always said on this telecast that I am more comfortable with Waymo being number one in autonomous driving once it becomes a big deal than even Tesla. And I might be contrarian there. And then, of course, the other thing that Alphabet has going against it, and it isn't anything new, it's a regulatory assault from the Biden administration, continued into the Trump administration, and even from the regulators in the European Union. So I still own some Alphabet. I've had it for years. I'm tempted to buy more because it is the cheapest of the Mag 7 stocks on a price to earnings ratio basis. It's even cheaper than the S&P 500 itself. But too many things swirling around. Got to talk about Nvidia. So yesterday, Nvidia's weakness continued, unfortunately, because in China, Huawei, one of their competitors, announced that it might be ready to roll with its competitor to Nvidia's at least late stage technology, H100 chips. Now, Nvidia is moving on to the Blackwell chip, but it had been until export restricted, selling these last gen chips into China and selling them fast and furiously. And so this could be a pretty big assault, even if Nvidia escapes some of these Trump tariffs eventually. Huawei is going to be a competitor. DeepSeek, with its low cost large language model, another competitor, not directly, but indirectly in that case. So it seems to me, with all the issues between the US and China, if you dreamt up a worst case scenario, it would probably cost Nvidia about $28 billion in revenue. And to put that in perspective, the revenue is expected to be about $200 billion this year. So that would be a 14% haircut. And if Nvidia absolutely crushes it in the United States, which I think there's a chance that they will continue doing that, good chance, then maybe the upside surprise will mitigate some of those losses. But if you think about it, it could be a pretty severe revenue shortfall, at least what analysts had in their original projections for $200 billion revenue this year due to these problems, geopolitical in nature, with China. What I do hope to see, and I think we will see, is so far of the Mag 7 hyperscalers, the one that build these AI data centers to train their models, and they build these data centers with primarily Nvidia chips. Last week, Google announced. Now, Google said, even though they gave a little bit of a squishy message that they're going to stick with their $75 billion over the next year expenditures on infrastructure, which would definitely support Nvidia's growth profile. Now, beginning tomorrow and then bleeding into Thursday, you will have 4 more of the Mag 7 reporting. And when they report, I'm hoping and I'm expecting that they will reiterate their guidance for their own AI capital expenditures for the rest of this year. The only one that I'm really worried about maybe reining in its guidance is Microsoft. And so many negative rumors have been swirling around that company. Even if it happens, may not be that big of a surprise. But of the Mag 7, first of all, I say don't buy anything, right? My buyer strike continues. But of the Mag 7, they all have some pretty significant individual issues. I'm not really bullish on any of them, even though I might have held some of them for a long period of time, just not doing any incremental buying of much recently. And so when you take a look at the Mag 7, so Apple and Amazon are going to be hit most by the Chinese tariffs, Apple in particular. There's not a large cap American tech stocks that's going to take it more on the chin than that company. You saw that Amazon rattled the cages with the Trump administration this morning. They were going to, now of course they denied a few hours later, going to put tariff-related costs on their site next to the price of products so you can see how much the tariff is potentially costing you. Of course, the Trump administration comes back early this morning, not only with the press secretary, but the Treasury Secretary, Scott Bessent, in tow, talking about Amazon's potential publication of this as a political and hostile act. It blows me away that you have this sort of back and forth between a presidential administration and one of America's top companies. There's over 1 million people in the United States that work for Amazon alone. This is bad. And so if the tariffs bleed into a recession here in the States, which I think is more likely every day, you will see the impact on Apple first and foremost, and then also Amazon. And Microsoft, I don't expect a lot of. Microsoft has been in a funk and has been a tech stock underperformer long before we had Liberation Day on these Trump tariffs in early April. And we'll see what happens to Meta. Meta is probably my favorite among the Mag 7, but I'm not buying it either because, like Alphabet, it is a digital ads company. If we have the recession that I'm now forecasting, even though I think Meta is in a better position than Alphabet, they're going to take it on the chin too. So hopefully we get all of these hyperscalers, the 4 of them, that are reporting in the next 48 hours, confirming their AI capital budgets. So the AI infrastructure trade is still on. But in the meantime, with their standalone businesses, I don't expect to have their typical meet and beat quarters. I actually think that there might be a chance that some of these companies rein in their guidance because Wall Street hasn't done that yet, despite the tariff and impact and the potential recessionary impact. So stay tuned. I'll be back with a full report next week on that. NXPI, which is a semiconductor company, we called it an analog semiconductor company. Its chips go mostly in industrial applications, particularly automobiles. They announced that their CEO is out. And whenever I see something like that without an adequate explanation, it raises a red flag for me. And so the CEO, who was pretty popular, is out without much explanation. And of course, NXPI, even the quarter that they reported last night was okay. They must be guiding down because Ford and GM and the regular cast of characters are big customers. They must get smacked by these tariffs. So stay away from not only NXPI for these reasons, but also the other analog semiconductor companies. Sometimes they're called mixed signal companies. Think of things like Analog Devices and Texas Instruments in that same group. We can't let a week go by without more conversation about OpenAI. This is going to be kind of interesting. OpenAI's ChatGPT is introducing a shopping tool. Could it become a big player in e-commerce? Well, they have a lot of users. And so I think that is very interesting. You also might have seen the report in the Wall Street Journal today about the deteriorating relationship between Microsoft, which owns 49% of OpenAI, and OpenAI, particularly the battle between the two executives who a couple months ago were in a bromance, and now there is trouble in paradise. This is really significant, and it's not just a squabble between two companies. If there is some kind of fracture in this relationship, it's actually going to have implications across technology much broader than those two companies, which are already two of the behemoths in our sector. So today, even though it's under the radar, Meta is having a conference, and it's LlamaCon, right? Llama is their large language model. And I'm hoping today at LlamaCon, because they're also going to have a separate announcement of their quarterly earnings this week, that at this conference today, hopefully, they reiterate their 25 AI infrastructure capital expenditure guidance, which right now is $60 to $65 billion until it is changed. I thought it was interesting that Meta is also firing a significant amount of employees from Reality Labs. So obviously, they're interested in managing their costs. Why? Maybe they see some trouble coming with digital ads from a recession, at least in the United States. Reality Labs is the group within Meta where they are trying out new projects. Think of it as the skunk works. And as I told you, we could have a $28 billion revenue hit to Nvidia from the tariffs. I've read estimates that Meta, because Meta is a digital advertising company, and because a big group of their digital advertisers, not only for Meta, but for Google, are retailers. And if retailers are hit by the tariffs, they're going to hide in the bunker. They're going to pull back on digital advertising spend. And yes, it's going to impact Meta to the tune of an estimated $7 billion of their revenue. And you would expect it to also kick Google in the ass too. I think this is very interesting. Oracle, right? Oracle, the software darling of the 80s and 90s. It's gotten a little bit of breath of life in the last year or so because of its Oracle Cloud Infrastructure business, OCI, which competes with Google Cloud, Microsoft Azure, Amazon Web Services. But a couple of years ago, they bought a healthcare records company called Cerner for a real big premium to where that stock was trading at the time, 40% premium, $28 billion deal. And it was supposed to be the merger of a tech stalwart and a leading healthcare company. And we were going to digitize health records and everything was going to be wonderful. Well, here we are a couple of years into it. There was a crash in the systems at Oracle, Cerner, and a bunch of community hospitals had their systems down for 5 days in a row. Can you imagine that for a hospital? So anyway, it looks to me like this purported, marriage made in heaven of healthcare and tech, at least from this perspective. And remember, they spent $28 billion on it. Never really panned out. Last week, one of our followers asked me about Vertiv. And so I promised I'd come back and give you my thoughts. So since then, the company has reported a pretty strong quarter. This is a company that is part of the build out of AI data centers. I like everything I see, but I will tell you that you probably shouldn't add to the stock, even though it got hit with all these other tech names so far in 25, until we get a confirmation this week from those AI hyperscalers that indeed they are going to follow through on their original plans to spend on building data centers. In the meantime, of course, my top AI infrastructure trade pick is going to be Nvidia, but I am even staying away from Nvidia until all the smoke clears. So Vertiv, whether it's a good company or not, I think it's a pretty good company. I just don't think that you can play this trade in the whole basket of these related names until further notice, but I'll be back on that. IBM is in the news. They're trying to kiss Trump's ass too. They want to show that they're going to build out infrastructure in the United States. They said they're going to spend about $150 billion here in our country over the next 5 years, including $30 billion, which I think is interesting, for mainframe and quantum computing. If IBM ever becomes a fast growth company again, it's going to be during the quantum computing revolution. And you got to give them some credit. They're positioning themselves nicely for it. And then by spending this money and reinvesting in the United States, which I think is a wonderful thing, they obviously are going to gain favor with the Trump administration. So another favorite of the Trump administration, Elon Musk, he took XAI, his artificial intelligence company, and kind of forced the merger of X, the old Twitter. And I don't know if necessarily assuming the cost of Twitter was a good idea because that company was in deep peril. But anyway, now they're together, and Musk is trying to do a $20 billion funding round that is valuing the combined companies at about $120 billion. We'll see what happens. That would be a test of the market for sure. And lastly, T-Mobile. T-Mobile has been on my list for some time. It's kind of a chicken shit tech pick, a relatively defensive tech pick. But since we met last, they did report a quarter, and Verizon's results were much worse in mobile. But T-Mobile, who usually blows away the consensus forecast for net new subscribers every quarter, actually missed by a significant margin. So this whole space is in my doghouse right now. T-Mobile is always going to be the head of the class, but I'm going to need to see, when I look at the charts, do my technical analysis, some stability in this name, because I must admit, after being right on this, particularly in a defensive environment, stock did really well while other stocks were going down. This net subscriber mess is actually a real bad tell. It's got them in the doghouse, got me sitting on the sidelines. Let's go through not just T-Mobile, but some of my other stock picks. We've had some movement here, but here are my fresh money buys, or at least I'm still comfortable with them here. Some are intentionally defensive. I call them tech chicken shit picks that are going to supplement. Right now, I have a really big cash hoard because, my buying strike, actually until at least we get through these quarterly earnings, continues. So I do like Robinhood, Palantir, CrowdStrike, Netflix. They've done well for you and me. I'm waiting on AppLovin. They're going to announce their results on the 7th of May, maybe the 6th. Guidewire, which is my fintech insurance software play, still like it. T-Mobile went from my buy list in green, as I just mentioned, to my watch list in yellow. I still like Take-Two Interactive. I still like the gold ETF. Now, if you're going to have gold in a portfolio, even though it's defensive, I think you should probably keep it to like maybe 5% or less of your total portfolio. Alibaba is my favorite in China. I am feeling a little better about China despite the geopolitical nonsense, but I am on hold and watch and see for that company. Duke Energy, electric utility, Plan D, SAP, and ServiceNow are my two favorites in enterprise resource planning software. I like GEV, GE Vernova, might be a very interesting pick here. That's new to my buy list. Checkpoint Software, Akamai, TSM, which is Taiwan Semiconductor, all waiting to buy more at certain price levels. I've been hiding in drug distributor stocks, as you may recall, including things like Cardinal Health and McKesson. CoreWeave has not announced yet when it's going to report its first quarter coming out of the box after its IPO a month or so ago. I actually think they're going to upside surprise, and hopefully the stock gets a little bit of a lift. And then this is kind of interesting. I've added, and I'm kind of waiting to see until the company reports in a few days, Genius Sports, which is a online gambling play that I like much more than the more popular Flutter and DraftKings. Might be a relatively unscathed play, even if we enter a recession in this country, which again, I think be happening. So let's now finish up with some tech trends. So it looks like the Federal Reserve Board is going to keep rates unchanged at their next meeting. However, as we get into June 18th, there's a 57% chance, a little bit less chance than we talked about last week, of a 0.25% hike in the benchmark interest rates. As I've told you before, watch all this on the Fed Watch tool, CME's Fed Watch tool specifically, because it is important to how you value tech stocks and other aggressive growth stocks. As I said before, I think the odds of a recession are increasing, and you have a potential recession, which would argue for the Fed to lower rates. If the tariffs are inflationary, which it seems to be, then you have an argument to raise rates. And so obviously it's a stalemate, not only probably among the Fed board members, the 12 that actually vote on rates every 6 weeks, but between the Fed and the Trump administration, between the Fed and central banks in other countries. Super confusing. Man, those guys have a tough job. Next, I thought here's an interesting factoid that I followed in the news that I read myself from my own sources. 50 gigawatts of new power capacity will be needed by 2027 to support AI. And to put that in perspective, that's 50 nuclear power plants. Problem is, nuclear power plants, maybe that's the best technology solution for this. But when you ramp a nuclear power plant and we need 50 of them, man, that is a long time ramp up. So I am not bullish on that. Next, take a look at these fines that Apple and Meta are being charged. During the Biden administration, the European Union was after these companies, probably even more so during the Trump administration. So these tech companies are fighting regulatory battles here in the States and in the European Union. And as we know from recent broadcasts, there is a good chance that the Federal Trade Commission, the Department of Justice, or all of the above will force Meta to spin off its acquired Instagram and WhatsApp. And I wouldn't be surprised if Alphabet isn't forced to spin off YouTube at some point and its digital ad tools. So doesn't necessarily mean that investors will lose money, because you will have stub investments in all those companies. But it's just really troubling. Tariff uncertainty continues. I can't necessarily add anything to that. But bottom line, again, another week, Professor Meeks tells you, stay on a buyer strike. I've given you some ideas to play defensively. Of course, the other idea is have a bunch of cash in your portfolio. I will be back, and I will be back aggressively, and I will tell you so, and I will tell you when. But right now, particularly with the Mag 7 reporting in 48 hours, oh my God, nobody knows what's going to happen. It's craziness. So those are the key issues. Let's hit a couple questions. TSM, what price to buy? I don't think it's necessarily a price that you need to look at for Taiwan Semiconductor. I think we just need to get through some of this geopolitical bullshit. There's no question in my mind that Taiwan Semiconductor's dominance will continue. There's no question in my mind that AI infrastructure trade is still on despite a current pause. And so, if you are really a long-term investor, you don't worry about short-term volatility, I would buy Taiwan Semiconductor almost at any price. What is better, GitLab or Mongo? I don't have a buy recommendation on either one of those companies. So I would go to more fertile pastures. Maybe some of these fresh money buy stocks on my list that I just unveiled. Thoughts for IONQ. They report earnings next week. Don't know the company well. I believe it's one of those quantum computing names. The problem is, right now they are based on speculation. I do believe quantum computing will be a very big deal. I don't know when. And remember, there's two parts to any new tech trend. One is the trend starts to ramp. The other one is, okay, cool, everybody's got it, but can you actually make money doing it? We don't even know the answer yet for AI. So that is a super speculative investment that I would hold off on. Not to say that you should sell it. I have no idea what they're going to say in their quarter. I'm sure they'll talk about the long-term thesis of the company, but I would keep all these stocks a pretty small portion of your portfolio because they are highly speculative, much more speculative than the average tech bear. How long do you expect a recession may last? I actually think it'll be probably a fairly short one, maybe a couple quarters. And the reason I think that is I don't expect to get much help in that regard from the Trump administration, except for it looks like the president watches the stock market carefully. And if we have a recession and there's rumblings about people losing jobs, a massive amount of people, and the stock market get actually crushed, the U.S. Treasury market gets crushed, I think turn course, right, to save face. I also think that if the recession starts to click in, that the Federal Reserve Board will go from a neutral position where they are now and pretty aggressively lower interest rates. We call that the Fed put. And so I think those are two sources of potential rescue. And if that's the case, as I think it is, then recession should be pretty mild. Can you elaborate on your thoughts on the energy needs in 2027 for AI applications? Well, these data centers, and I think with a potential pause from maybe Microsoft building out AI data centers, everybody else will keep up the pace, maybe even accelerate it. They have a voracious need for energy. And it looks to me that out of all the energy sources, the most logical one, at least in the long term, is nuclear. The most logical one in the very short term is probably natural gas. And so, yes, we have voracious energy needs. The problem is if you bet too heavily on these nuclear-only investments like Constellation Energy, which is a company I admire, a ramp up in a nuclear facility, even if things go very well with all the regulations and permitting that's necessary before you get started, this is going to be a multi-year build out. So yeah, do you invest in it that early? I don't know. And we also saw that companies like Constellation Energy Group were definitely included in the AI infrastructure trade, right? They are some of the greatest stocks going along with Nvidia in 2024. But you saw when the back was broken on the AI infrastructure trade that those guys came down, even though they're supposedly utility companies, they came down just as hard as Nvidia and some of the other ones. So Yes, there is a long-term future for these names. I think I would play nat gas over nuclear, at least in the short to intermediate term. And don't think that these are relatively defensive plays, regardless of them being considered utility stocks, because they are AI infrastructure stocks. That brought them to the dance, and that will also sink them. So I'll take one more question if there is one. What is the case to buy Checkpoint over Palo Alto Networks? I like them both. I actually think in cybersecurity, I prefer CrowdStrike over all of them. And I also, as you saw, have a buy on Palantir. But I think Checkpoint and Palo Alto Networks are pretty good companies. It looks to me technically that Checkpoint should be in a superior position. But you know what? I think all these two stocks and the other two that I mentioned should be fine. We're going from the AI infrastructure trade here in technology, which focused on semiconductor and hardware, to cybersecurity and software. And you know what? I think you do pretty well with a basket of all four. All right, everybody. Thank you so much for joining this week. Remember, like me, subscribe. Give a shout out to our buddies at Benzinga by subscribing to their Benzinga Pro Tools. And if you're interested in my tech portfolio, Harvest Portfolio Management down here in the Deep South, Charleston, South Carolina. We'll see you next week.